All right, welcome back, everyone. Well, you know me, I can't stop thinking of that presentation that Sherwood provided. Now, I know all of you are curious. Number one, yes, the session was recorded. And two, Sherwood is going to make the presentation available. All of you should look at that presentation and utilize it not only for your funding platforms, for those in the ecosystem, for companies. It's working. It's working. Remind yourself of that. So now we're into the exciting part, the funding portals. That's where you go. This is one of those vehicles where you can go to. And my colleague, Peter Danico, is going to start us off. Peter, floor is yours.
Hey, thanks, Oscar. Coming out of that last session, that's everyone that's involved in the crowdfunding portal space should be extremely excited as far as the opportunities going forward. Quick introduction here. I'm Peter Danica with KoreConnects, and my real main role is engagement and education between our KoreConnects partners. We all know right now that democratization of capital has provided access to a broader pool of investors. But what I find really, really fascinating right now is it also brought it ever expanding, innovative crowdfunding platforms. And our guests today are on our panel. We're hoping to have a number of other ones jump in. There's some of those innovators. I mean, as innovative as the entrepreneurs that they service, the portals themselves are extremely innovative as far as what they offer to both the investors and what they offer to the entrepreneurs. So they represent what I consider the best cross-section of crowdfunding portals in the industry today. And we're going to start, and I'm going to have two of our panelists that have arrived already, Ravi and Marvin. I'll start with you, Ravi, if you could give us a brief introduction, and then we'll dive in and go through some questions and answers for our audience.
Thank you very much, Peter. Hi, my name is Ravi Srivastava, and I am one of the founding partners of Akimona. Akimona is a funding portal. It's a funding portal that is 100% based on smart contracts and issuance of digital securities. That's a quick introduction. Back to you, Peter.
Well, Marvin, we'll swing over to you, and then we'll dive into some questions.
Yeah, great. Well, welcome, everyone. My name is Marvin Abrinica. I'm one of the founders of Wonder Fund. We're based in Ohio, in the Midwest, and we really look at the Midwest as one of the hotbeds of flyover country, where there's great opportunities for entrepreneurs, especially around lifestyle businesses, Main Street, community real estate, and sustainable technology. We really focus on social capital and really trying to bring investment into impact businesses and create equity for all. And right now we've done over 30 different deals to date, and we're excited about 2022 as we just heard in the previous session. So excited to talk with you all.
Let me while we're on that, you mentioned that it sounds like there's an emotional connection with the investing community as well as the entrepreneurs. Can you maybe elaborate a little bit on that?
Yeah, absolutely. You know, in the United States, if whether you're talking venture capital or private equity, you know, from the venture side, less than 12% of Black, Latinx, women, and LGBTQ companies are funded by venture capital. And if you isolate where those dollars are going to, majority of those dollars are going to the coasts. And then if you're a small business, the reality is that there are the small businesses far exceed the number of startups, if you will, that are out there. And a majority of them are not using or tapping into the banks yet. And a lot of this has to do with systemic structures that are keeping some people of color, the disenfranchised, from the ability to access that capital. And so the way we see it is you have to level the playing field, and democratization is one way to do it, that being crowd investing. And the other is really to drive it around social causes and a lot of social sustainability.
What kind of social causes have you guys been involved with? I know that's a big conversation every day.
Yeah, there's a lot of different things, and if you're familiar with the UN's Sustainable Development Goals, there's 17 different goals out there. If you Google it, it's a really interesting, kind of framework. And when we look at companies and we vet companies, we're always looking for companies that tie into things like whether that's green technology, whether it's ending things like poverty, whether it's job creation, all of these type of things that are going to lead to a better world. And so for us, it's a key component of our strategy is to find companies like that. And then when we apply that to how that looks in a crowd investing environment, you think about a lot of people who are underbanked or people who cannot access the banks for one reason or another. And like for instance, there's a lot of people we talk to who are like Black or brown people of color who are starting new businesses. In fact, Black and brown founders and when it comes to small business, they're more, a majority of them are in the tech, not in the tech space, but more in the small business space. And so who's really catering to them? And that's one of the areas that we say, and we look at and we say, those are some people that we need to tap into and ones we need to support.
Well, and there's such an underserved market, I think, is what you're really saying from that investor community. Hey, I'm going to jump over to you, Ravi, and we're going to keep going back and forth, and feel free to jump in at any moment. You're in the tokenization world, and I'm not, while I understand it, being a crypto enthusiast, maybe you can give me how that plays into the crowdfunding. And from the social side of it that Marvin was referring to, does that fit in your initiatives? I think we're on mute.
Sorry about that. So, okay. Marvin, you are doing very impressive job, and we cannot even get anywhere close to you. So, but our direction is, when we founded, it was mostly focused on technology, focused on creating transparency, and focused on empowering investors. Because we believed that when we were setting it up, and again, we are talking about tokenization, because securities are generally held, in fact, they are always held in the custody of a broker-dealer or a funding portal or a transfer agent. So the investors at the end of the day do not have a custody of their securities. We wanted to create a platform which will be an ecosystem which will be completely non-custodial, which means that investor can hold custody of tokens in their wallet. And then once the restricted period of 1 year is over, they will be completely free as long as they can find a buyer. They can exchange their tokens with the other buyer. Of course, the other buyer will have to go to the transfer agent, get their KYC AML done, make sure that everything was okay, and the transfer agent will complete the transfer. But again, that's no different than the way when you buy a car, from the market, and then you go to DMV to get it registered in your name. So same thing. So what we want to do is that we believe that we can, by leveraging this blockchain technology, we can empower the investors and put the power back in the hands of investors. This power was taken away because originally we used to have, long time back, we used to have paper securities, and paper securities used to be in the hands of the investors. And then the times changed, and there is a whole story about that, how the system was changed. And the individual customers, they lost that level of transparency. But now we have this opportunity to do that again. So that's what we are doing, is we are putting the power, and by doing that, we are going to be empowering business, because businesses can go and to investors and say that, yeah, you hold the custody in of your investment in your hand. You can trade that, and basically, if there will be full transparency on the blockchain, how many securities have been issued, how many funds were dispersed. Everything is 100% tracked on the blockchain. So that's our concept. We have implemented concept. We in fact went live just about 2 weeks back. We have got certain issuers doing testing the waters. Marvin is far ahead. Marvin has done. We haven't done any offering yet because we have just gone live. We expect to have our first offering go live in sometime in December.
Well, you're part of that whole emerging ecosystem that we talk about, as far as the ecosystem being crowdfunding platforms at large. I mean, they're becoming more and more diverse. I'm one of those guys that probably still has a few old share certificates. My daughter laughs, and she's a university grad that is impassioned and totally passionate about everything that you're doing, Marvin. And it just tells me that there's a huge audience out there of investors, and it's from all age groups, all demographics. What has been your experience with the adoption from the investors themselves coming into your portal?
Yeah, it's a great question. I think ultimately investors are pretty savvy, and they know a good deal when they see one. And so, I think it behooves a lot of portals like us to ensure that we're doing the right diligence to find valuable companies, ones that have a viable product, and they're able to showcase the best of what they provide there to the market. And so what will happen with that is then, when you have those companies out there, they're the ones who tend to rise to the top. And from that, what we found is that, there's a lot of, number one, there's a lot of interest in deals in the private space or private equity space, smaller deals that will provide a level of liquidity and or an income stream back. And so we're seeing a lot of that happen right now. I think the second thing is that you also have to see that a lot of these investors are expecting a way back to get their money. So when I look at that, this is something that I think is really interesting that Ravi is doing, is that you're providing a level of liquidity, whether that's, post 1 year or 3 to 5 or 10 years from now. A lot of these investors want a way to pull their money out. And so, from that standpoint, I think that's a really important thing for investors and communicating out to investors in our portal. What is the process for them to get their money back? And something we always communicate and have our issuers communicating out as well. And the third thing I think is really important about this whole thing is that you have to remember that, when it comes to investing in private companies here, crowd investing even, is that we're competing with investments in the stock market today. And, the markets have been doing extremely well and very resilient over the last 2 years, despite COVID, maybe with the exception of the last week or so. But, because of that, there are a lot of discerning in terms of the types of investments and whether they should invest in companies on our portals. And so it really behooves our companies as well as our deals to be strong enough that they could stand alone as a deal, whether you're doing it as a crowd or you would do it outside of the crowd.
Great to hear that. I mean, I'm thinking out loud, or thinking to myself here, the investors, I think they're looking for that, that alternative exit or that alternative trading systems, and the technology is certainly evolving quickly for that, and the platforms and everybody in the design of the marketplace is starting to facilitate that. From an outreach perspective, from the entrepreneurs side of it, when they're in the portals, a lot of the entrepreneurs are asking that question, go, what's really involved? I mean, I think most of them aren't naive enough to say, let's just put it up there and they will come. They recognize that there's a lot of marketing that needs to be done in order to communicate with their potential, communicate their potential offerings. So, both of you, what's your take on that? What would you recommend to that entrepreneur that's coming into your portal?
So Marvin, you want to go ahead?
Yeah, absolutely. I think You're absolutely right, Peter. You can't. It's not a field of dreams. You don't just build it and people come. You really have to be dedicated to marketing these types of things. My background is I was a brand marketer for one of the major CPG companies, Procter and Gamble, for many years before I started this. And when I came into this, it's with that mindset that you really have to gain impressions, if you will, or the cost of per thousand impressions, and thinking about like, what is your advertising strategy? Which channels do you want to break into in order to get the word out with that, and then which targets that you want to reach out to. And so a lot of that has to do with doing your homework, with understanding who your markets are, where there's overlap between your product itself that you're providing as an offering, but then also what type of investors are there, and then finding that overlap and being able to target them via different advertising channels. And so with that, we would always recommend really partnering up with some of and there are a lot of great ones now, a lot of agencies that are focused on investing and the finance space. One, partnering up with them, but then two, getting a really clear picture of who your target consumers are from an investment standpoint, and then ensuring that you have a good profile of who those people are so you can reach them. So with those two things, I think those are like some things that we always look for when it comes to issuers who are dedicated to doing that and willing to put some dollars behind it.
And those are super great points. And I think the success of any raise, and there's been some tremendous raises that have occurred recently. When Oscar talks about, $5 million raises in 3 weeks, that happened because there was a lot of upfront work.
Yeah,
there was great, investor acquisition firms and advertising and marketing and going through multiple channels and measuring. It's no different than any e-commerce site that's selling them, selling their wares or selling whatever services they may be selling on the web. You've got to market it. I want to welcome Josh into the panel here. Josh, we did some quick introductions earlier. Perhaps I can just dovetail into you and say, hey, tell us about your platform or your portal, and let our audience know what you're all about.
Great. Hello, Peter. Thanks for the invite and for allowing us to join here. Hello, Marvin, Ravi, and others that are here. So I am with Fundify, and we are a crowdfunding platform. Also, we're looking to build something where startups of any kind raise capital, whether it be through equity crowdfunding, but also through other avenues. We're looking at all the different ways to help startups raise the capital that they want, industry agnostic. Right now, we've got 4 live campaigns and 18 test the water campaigns on the platform, and we're just going to building up. We're relatively new to the space here in the last year. It's nice to meet others that are here as well, and would love to see how we can collaborate and think about things. I think also someone was mentioning what they did in the past. I previously founded art.com and allposters.com back in the days of when the internet was just getting started in 94, 95. We built that business. We had 23 million paying customers and lifetime did just shy of 3 billion in sales. And we hope to kind of take some of those learnings into this space and really make a difference in the funding world. So
I'm really, really grateful to meet you, and we're so glad that you are here. As I think everybody's agreeing that the crowdfunding business, and it is a business, it is just still in its infancy, and you guys are the leaders, and what you're doing and the ability to collaborate, with your competitors in some sense. You're not competitors in other sense, but together we all learn as a collective. Because at the end of the day, it is all about those consumers. It's all about those investors. It's all about those entrepreneurs that are looking for a new fresh start. And the numbers are so exciting about what's going on in the space altogether. You touched on the types of the broad spectrum of offerings that you look for. So I'm going to throw this back at Marvin and Josh, Ravi, just because they're set up with entrepreneurs already. What types of entrepreneurs do you look for? What types of entrepreneurs might not be ready for you right now? You mentioned before they actually go on the portal, they test the waters. Maybe you can explain to our audience a little bit on that. Marvin, we'll start with you on that one.
Yeah, sure. Well, first off, our target when it comes to issuers or entrepreneurs who are looking to raise capital, first we're always looking for three different buckets. The first one is technology, but we have a bent that's more around sustainability and social sustainability as well. So we're always looking for companies that are meeting those type of goals, whether they're Black and brown founders, whether women, LGBTQ, or their product or service is oriented in some way around sustainability. So that's one. And then the second area that we find is has a lot to do with Main Street businesses. And Main Street businesses, what we really consider things like restaurant groups or breweries, ones that have viable businesses that are that maybe a second or third location, and they're really trying to expand out their Main Street business. And a lot of those type of deals bring liquidity to investors from that standpoint, like preferred equity and so forth. And then the third area that we look at is what we call community real estate. And real estate deals are always a nice welcome to any portal that's out there, but it's also a nice welcome to a lot of investors who are looking for ways to park their money in what they would consider as relatively safe. It's tangible assets. Those are ones that we would look at. And really, ultimately, our goal from that standpoint at Wonder Fund is we have this mantra, and it's this whole vision that we can revitalize Main Street. And the way we do that is really by focusing on those types of founders and what types of things that they're trying to do. So in doing that, you asked the question about testing the waters. We'll certainly have a conversation with these founders. And then if we like what we see and when they're submitting their documentation through our funding portal, if we like what they see and we go through the first few stages of that, we'll put it on there just to see what kind of interest is going to be there for those companies. And that's the power of that new stipulation or exemption, is that you don't have to launch it without or with an ask, if you will.
Yes.
You can launch it, and then you can see what kind of interest there is for that product or service. And it's good not only for the issuer, because the issuer can really test to see if there is interest there, but it's also good for us because we use it as a way to then determine if this is a viable company that really is going to drive a lot of interest. So it's good on both sides of that.
No, great answer. And I think super insightful. It really helps for that issuer to also, maybe they have a really good offering, but their messaging is wrong. And that lets them, minimize their spend, test the water, so to speak, from an advertising perspective, and recraft it. And maybe that's all it is. I mean, we've seen so many products and so many services whereby it was the messaging that was the problem. Hey, so Josh, with you guys, when it comes to testing the water and the types of companies that you're going after, give me a summary of the entrepreneurs that you're having success with, and the ones that you like, and the ones that you're learning from. And I guess it's all of the above.
Okay. Well, I'll say that I already really resonate with what both of you had said around test the waters. It's a great opportunity to not spend all the capital and time on regulatory filings and get interest, right? And find out how that message is coming across to others. We are seeing opportunities that are across the board, from movies to to mining companies, to entertainment companies, technology companies, and in some cases we'll see a little bit of interest that turns into a little bit of interest on the test the water side, that turns into quite a bit on the live campaigns, and then others we get more interest on the preliminary side. But it is a chance for the founders to adjust their message, right? To talk about it perhaps in a different way, to gain followings on their campaign rather than just on their, I don't know, Facebook page or LinkedIn profiles, right? Now they've got someone following a campaign, which is specifically about that raising capital. And then you can talk to them about that on a regular basis, right? We encourage that sort of updates on a regular basis to our startups, because then they can do that on the test the water side as well as after they go live.
Well, you touched on a super important point that we hear all the time, and one of that is that your first-time investor, your ability to re-engage that investor over and over and over again is all about communication. And if you're not doing that, I think you're really, losing that opportunity. We've all had, we're all investors ourselves, and we've all reached out to the marketplace. And when we don't hear back, it puts a real sour note on you. So one of the messages that we're hearing is, and maybe you guys can shed some light on that, is that ability to communicate with your initial investor and then try to recapture them again and really stay engaged. And I think that's really important for that entrepreneur to know. It's not a one-time event.
Mm-hmm. I think that one-time event would be the equivalent of meeting someone at an event like this and expecting them to invest right then and there, right when you meet with them. And the reality is they might have questions, which is totally logical. Hey, could I review those financials? Could I take a look at the video that you created? Or do you have another video that you created? I'd like to understand your revenue model some more. All this, types of questions that can come up. Who else is on your team, right? Which you couldn't possibly know if you just met one person at one time. So often it takes multiple interactions, investor with the startup, in order to facilitate the actual investment. Maybe on the first time they'll follow you and they start watching your campaign, and start looking at what you're doing, but that turns into the investments in a short period of time after that.
No, really good point. The entrepreneurs, one of the common questions that we get, what's some of the different pricing models? Ravi, I don't know if you're there yet from a pricing model. But
we are talking about the pricing model, and the pricing model we have to declare the pricing model and your question is that how much do we charge from an issuer? Is that correct, Peter?
Correct. Yeah.
Right. So our pricing model is and I totally understand there are the challenges because we have to put in effort first, and we cannot if we are totally dependent on the success of the offering, then we are taking a big risk. So we charge a small amount upfront from the issuers, and that amount generally covers the background check charges, some just basic costs it covers, and then rest of that, and this is included in the overall 6% we charge, and we haven't. In the future we will add another 2% in terms of the securities which are issued on the platform. We haven't yet added that. So we charge a fixed amount, and then at the close of the successful offering, we'll charge 6%, and the upfront payment that was made will be included in the 6%.
Okay, so an upfront fee and a percentages of the offering. I think every entrepreneur every issuer that's looking, they recognize that you have to spend some money in order to do it effectively. But at the same time, they want to just where's their money going, and it's in the best place. Marvin, what are you doing with? I'm an entrepreneur.
I think first and foremost, you have to think about if you're an entrepreneur, if you're a good entrepreneur, you got to think about what your cost of capital is, and what does it cost to get capital, and whether that you're going through a bank or debt, or even from a standpoint of equity. And equity is, of course, the most expensive. Now, the nice thing about equity is that you don't have to. It's not on a service table that you have to start paying back right away. So, that's the first thing. And so we always look at that from the lens of what is the company trying to raise, and then what is their cost of capital behind that. And so we charge, like Ravi, we do charge what we would call an underwriting fee. And that's really just to make sure that there's skin in the game. You don't want to work with people who are just like kind of in it for, kicks and giggles with this type of thing. You want people who are serious about it. And so that underwriting process gives a lot of entrepreneurs a PPM. We file the Form C on their behalf. My compliance officer is a regulatory attorney, my business partner in that. And so, we manage that on behalf of the issuer so that they're going to pay that kind of money to a lawyer anyways. And so as part of that, that's the two parts of it. Is one is the underwriting piece of it. And then the second piece of it is the listing portion of it. And that's what goes into that upfront fee. And then on the back end, we charge anywhere from 5 to 8% on a sliding scale. And a portion of that, is at least 200 to 300 bips are, we have the option, if you will, to choose to get that success fee in equity in the company,
Okay.
not in terms of 100 to 200 bips of the company itself, but more so of what the same security that is being offered in the deal. So that's kind of how our model works. It's worked very well for us because ultimately we want to make sure the entrepreneurs are cash flush. You don't want to be taking all of the money that they're trying to raise when it comes to that. You want to make sure that they have enough operating capital to get started. So that's kind of how we operate.
Okay. Josh, did we?
Our model on the finance side is really easy for the startups. It's fully success based for the most part. We charge 7.5% of the capital raised, and that can come in the form of cash or at closing, or equity, or a combo of both.
Okay. So advice to checklist for that entrepreneur that's saying, okay, I'm looking at I want to look at see a crowdfunding raise. I want to look at a Reg A raise. Obviously, you guys are in the crowdfunding space, and this is where you want them to go. But as far as differentiating, any thoughts or?
I'll jump in if nobody.
Yes,
yeah, I mean, if you're thinking about, go ahead, please go ahead.
That's okay. Go ahead. You're started. Go ahead. Thanks, Marvin.
When it comes to checklists, there's certainly a checklist that we provide our issuers, and ultimately at the end of the day, you really need to make sure, one, I would say, is make sure you have a good enough product and or service that is out there, that you've tested it with your consumers or your customers, at least from a beta perspective. If you have an MVP, it's always good to start with something like that. I think more and more investors are savvier in this space, and a lot of investors, they want to make sure that there's an opportunity for exit, and there's a lot of things that can go wrong in the early stages of startups. So that's the first thing. I think the second thing is really understanding that business plan and the financials behind it. This is just what I like to say is the kitchen logic. I can't even tell you how many times I've had conversations with founders who really don't even understand like how their company makes money. And, as somebody with a finance background, I'm always digging into those questions because I can tell whether they understand margins, whether they understand the unit economics of the company. And, in real quickly, you can determine within 5 minutes whether they have a solid understanding of their pro forma and through that pro forma, what amount of money they need. So that's the second piece. And then the third advice I would say is really understand how you're going to market the offering. And there's some people who will tell me, oh, well, we're just going to do all social. And I'm kind of like, okay, well, do you have a presence on social media? And, well, no, not yet. And it's kind of like, well, all right, well, you can't just do all social. There's a lot of other channels that are out there. And, and believe me, my background was in consumer goods, and, we did a ton of advertising when it comes, and there's a reason why you call it omni-channel, because you're talking about everything from TV to print and radio and news and all those other things and PR, et cetera. And so for somebody who tells me that, we're going to use Instagram and that's kind of our primary thing, it always raises red flags for me.
Sure. I think we've all experienced that. You can have the best bar of soap on the planet, but the consumer at the end of the day has to know why. And if you just and an omni-channel approach from a marketing perspective, I mean, those are all the big considerations. I did want to touch on a real key point, and then Josh, I'll jump back to you, which was a regulated crowdfunding platforms. A lot of the entrepreneurs out there, really think sometimes that the crowdfunding bucket is this one big bucket of myriad of places that I can just do this crowdfunding thing. It's regulated. You must be fully compliant. And you guys, and to anybody listening out there, you really want to make sure that if you're going on a crowdfunding portal, know who they are, what they do, are they regulated, and what's their background. Don't put them all in the same bucket that they're all the same. Guys agree, there's a few unfortunate cases out there that may not be as opportunistic for that entrepreneur that's didn't do his due diligence. Josh?
Well, certainly I would say that you'd want to work with a regulated platform, right? I mean, you want to do things correctly, and the platforms, Fundify, the others that are here, will have many offerings for our belts, right? Where a startup does one, maybe they'll do another one that's consecutive in a year, but the reality is the platforms are the ones that understand how these things are going, and when they have questions, we know who to ask and where to go, right, along those lines. So along the lines of the question that you're asking before around, how do you go about it, or what do we recommend to startups? For us, I really liked a lot of what Marvin was talking about, but also as we think about that, think about how much you're looking to raise, right? If you come in and saying, I want to raise $50 million, well, you're going to go through a Reg A offering because that goes up to $75 million, whereas a Reg CF offering only allows $5 million. You can add a Reg D to add 5 to 10 million more on top of that. So you end up with a $15 million capital raise. But if you're looking to raise more than 15 million, it's going to be a Reg A offering. And so those are some of the, maybe another point of contention or a thought might be, I don't have a financial, I don't have my financials audited. Okay, well, now that creates some different decisions on what I might be able to do, and perhaps I'll create a rolling close or something of that nature, right? So anyhow, I think that's the way that that they're thinking about this. And that's the way we recommend at least to think about it. Hey, Peter, I just want to mention, I think that Oscar is in the chat and maybe trying to move the this session. Not that I want to get off because I love being here.
No, I think we're running into our time slot here, so we're gonna let. I want to thank you all. It's been absolutely terrific. It's always insightful, and you guys are the front runners, and you guys are the evangelists of crowdfunding. And again, after hearing the previous Sherwood's data and his stats, I mean, you guys got to be excited. And I think the investment community and the investors, issuers should be real excited too about what crowdfunding has to offer. So again, I thank you all and have a terrific 2022, and we look forward to the next summit.
Thanks, Peter. It's great to be here.
Peter.
Thanks, Peter.
Thank you.
Thanks, Oscar.